Did you know that during the first month of World War I, the Dow Jones Industrial Average plummeted almost 8%? That's right, 8%. Wars and big geopolitical events can really shake up the stock market. We're talking huge swings, both up and down. It's a wild ride, folks, and it's important to understand why. Think about it. War brings uncertainty. Uncertainty makes investors nervous. Nervous investors sell their stocks, and boom, the market takes a hit. But it's not always bad news. Sometimes wars can actually boost certain sectors of the economy. Think defense contractors, energy companies, and commodity producers. Their stocks can soar when tensions rise. That's why we need to pay attention. We need to be ready. Whether you're a seasoned investor or just starting out, understanding how wars and global events impact the market is crucial. It's about protecting your hard-earned money and making smart decisions. So buckle up, because we're diving deep into the world of geopolitics and finance. Get ready to learn how to navigate the market's twists and turns when the world throws a curveball. You might be thinking, Jim, I'm not a Wall Street hotshot. Why should I care about wars in the stock market? Listen up, because this affects everyone, not just the bigwigs in fancy suits. The stock market is like the economy's mood ring. When things are good, peace, stability, growth, the market is usually happy, showing green. But when things get messy, wars, conflicts, sanctions, the market gets anxious, flashing red. And guess what? A shaky market affects your 401k, your retirement savings, even the price of groceries. It can impact interest rates on loans and mortgages. It can even influence whether businesses hire or fire. We're all connected. What happens in some far-off country can ripple through the global economy and hit your wallet. Ignoring geopolitics is like walking blindfolded across a busy street, risky business. That's why I'm here to give you the lowdown, straight talking, and jargon-free. We're going to break down complex concepts into bite-sized pieces you can understand. Knowledge is power, and I want you to be empowered to make informed decisions about your money. Let's face it, war is unpredictable. It's a messy business, full of surprises and sudden shifts in power. One day diplomats are talking peace, the next bombs are dropping, and the market hates surprises. This uncertainty creates volatility, those wild price swings that make investors sweat. When war breaks out, investors get jumpy. They sell off assets, seeking safer havens like gold or government bonds. This mass exodus can send stock prices plummeting faster than a fighter jet. But here's the thing, volatility cuts both ways. While fear can drive markets down, so can greed drive them up. Remember those defense contractors and energy companies we talked about? Their stocks might surge as governments ramp up military spending or scramble for resources. This creates opportunities for savvy investors who can stomach the turbulence, but it's a high-risk game. Timing is everything, and even the experts get it wrong sometimes. That's why it's crucial to have a plan, manage your risk, and avoid making rash decisions based on fear or FOMO, fear of missing out. To understand how wars might impact the market today, it's helpful to look back at history. While the past is never a perfect predictor of the future, it can offer valuable lessons and insights. Take World War II, for example. The US stock market initially plunged when war erupted in Europe in 1939. But as the US ramped up its industrial production to support the war effort, the market rebounded sharply, marking the beginning of a prolonged bull market. The Cold War offers another interesting case study. While not a direct military confrontation, the decades-long standoff between the US and the Soviet Union created a climate of geopolitical uncertainty that fueled market volatility. The Cuban Missile Crisis in 1962, for instance, triggered a massive stock market sell-off as fears of nuclear war gripped the world. These historical examples highlight the complex and often unpredictable relationship between war and the stock market.